Close your eyes for a moment. Picture this. You wake up on a Tuesday morning, grab your coffee, open your brokerage app, and you see it. A notification that stops your heart cold. Your stock. The one you researched for weeks. The one you believed in. The one you put your hard-earned money into. It has been delisted. Panic sets in. Your mind starts racing. Is my money gone? Did I just lose everything? Can I still sell? What happens now? This scenario is more common than you think. Thousands of companies get delisted every single year, and the vast majority of investors have absolutely no idea what happens to their shares when it occurs. Welcome back to our channel, the channel where we cut through the noise and give you the real story on the investments everyone is too afraid to talk about. If you are new here, smash that subscribe button right now because you do not want to miss what is coming. Today, we are going to answer the question that every investor dreads, but almost nobody asks. What actually happens to your stocks if the company gets delisted? We are talking about real rules, real scenarios, real outcomes, and the one critical action that separates investors who recover from investors who lose everything. And here is the thing, the truth about delisting is going to shock you, not because it is terrifying, but because almost everything you have heard about it is wrong. Let us get into it. What delisting actually means. Let us start where every great financial analysis should start, with the definition, the actual, legal, regulatory meaning of delisting. Delisting is simply the removal of a company's shares from a stock exchange. That is it. The shares no longer trade on the exchange where they were listed. Now here is the truth that most investors do not understand. Delisting is not the same as bankruptcy. It is not the same as the company going out of business. It is not the same as your shares becoming worthless. Delisting is just a status change. The company still exists. The shares still exist. They just trade in a different environment. The delisting process. What actually happens? Now, let us walk through the process. Because what happens when a stock gets delisted is not what you think. When a stock falls below the minimum price requirement, the exchange issues a warning. The company has a grace period, usually 180 days. During this time, the company can try to raise the stock price. They can do a reverse stock split. They can try to attract new investors. They can try to turn the business around. If the company fails to meet the requirements within the grace period, the exchange initiates the delisting process. The stock is suspended from trading, then it is removed from the exchange. Here is where it gets interesting. When the stock is removed from the major exchange, it does not just disappear, it moves to the OTC market. OTC stands for over-the-counter. This is a decentralized market where stocks trade directly between parties without the oversight of an exchange. The ticker symbol changes. Usually it gets a Q at the end to indicate bankruptcy proceedings, or a Y for a foreign stock, or a Z for a company that has filed for bankruptcy. And here is the key question. Can you sell your stock on the OTC market? Yes, you absolutely can. The stock is still trading. It is just trading on a different platform. The catch? Liquidity is much lower. The bid-ask spread is much wider. The price is likely much lower. But you can still sell. The myth of complete loss. This is where the story gets really interesting. Because there is a massive myth that needs to be busted. The myth is that delisting means your shares are worthless, that you have lost everything, that the delisting is the end of the road. That is a lie, a complete and total lie, and the data proves it. When a stock gets delisted, it does not automatically go to zero. In fact, many delisted stocks continue to trade for years. Some even recover. Some eventually get relisted on a major exchange. Do you know what happens to the average delisted stock in the first year after delisting? It does not go to zero. It goes down, significantly. The average delisted stock loses approximately 60% to 70% of its value after the delisting event. That is painful. That is devastating. But it is not zero. And here is the thing. That remaining 30% to 40% of value can be recovered. There are investors who specialize in buying delisted stocks. They trade them. They make money on them. Some even make fortunes, but the average retail investor? They panic. They sell at the worst possible moment. They lock in their losses, and they never recover. Your options as an investor. Now let us talk about what you can actually do, your options, your choices, the actions that can save your capital. Option number 1, sell. This is the simplest and most straightforward option. You can sell your shares on the OTC market. The process is slightly more complicated than selling on a major exchange, but it is absolutely possible. You will likely receive less than you paid, but you will receive something. You can walk away with cash in your pocket. Option number 2, hold. This is the contrarian option. You hold your shares, you wait. You hope the company recovers, you hope the stock gets relisted. This happens more often than you think. In the wake of the 2008 financial crisis, many banks were delisted. Some of them recovered, some of them were relisted. Some of them generated enormous returns for the investors who held on. Option number 3, participate in bankruptcy proceedings. If the delisting was caused by bankruptcy, and if the company is liquidated, shareholders might receive some residual value. It is usually pennies on the dollar. Option number 4, do nothing. This is the most dangerous option. You hold the shares, you do nothing. You wait for the company to do something, and you let the shares sit in your account, slowly becoming worthless over time. The key takeaway: you have choices. You are not trapped. You are not helpless. You can take action. The final verdict. So after everything, the definition, the process, the myth of complete loss, your options, and the survival statistics, what is the verdict? Here is the honest answer. It depends entirely on you. If you panic, if you sell at the worst possible moment, if you let fear drive your decisions, you will lose. The stock price is already low, the volume is already thin. You will sell at the bottom, you will lock in your losses, and you will never recover. If you stay calm, if you do your research, if you understand your options, you can protect your capital. You can sell when the price is still reasonable. You can wait for the OTC market to stabilize. You can hold if there is a credible turnaround plan. On panic and emotion, delisting is a disaster, not even close. On knowledge and preparation, delisting is manageable. Delisting is not the end of the world. It is the end of the exchange listing. It is a warning sign. It is a signal that something is wrong. But it is not the end of your investment journey. And that is the truth that the financial content world does not want to say out loud, because it is easier to scare you than to educate you. It is easier to tell you to panic than to tell you to think. That is what actually happens to your stocks if the company gets delisted. The truth nobody else is telling you. Now, I have a question for you. Have you ever held a stock that got delisted? What did you do? Did you sell? Did you hold it? Did you recover? Drop your story in the comments below. I read every single one, and if you have a friend who is worried about their stocks, share this video with them. It might save them from making a panic decision they will regret forever. If this video gave you clarity and confidence, do me a favor and hit that like button. Subscribe to our channel and turn on the notification bell. We drop new videos every single week that challenge conventional financial wisdom. Next week, we are diving into something even scarier. You will not want to miss it. Until then, stay informed, stay calm, and never let fear drive your investment decisions.